But from equities, let's also shift focus to what's happening on the commodity side of things. Manisha is here with exactly that. Manisha, good morning.
Morning, Prashant. Thank you for that. I'll start with the crude oil prices because we've seen very strong gains come in for this one. Remember, the month of May has been on the stronger side as well, and June has started almost a couple of percentage points on the higher side. And this is coming in after 2 weeks of decline that we have seen in for the crude oil prices. Well, there has been a lot of conversation when it comes to geopolitics, to tariffs as well. But what the crude prices seem to be taking sense from right now is the OPEC Plus meeting. This was on Saturday, on 31st of May, where the OPEC Plus has decided to increase production for the month of July by 411,000 barrels per day. This is on expected lines, is the reason that the markets have reacted on the higher side here. The OPEC Plus also have said that the increase could be paused or reversed as the market conditions be. So they're quite flexible on this, and that really seems to be supporting the prices right now. Having said that, when you look at the first quarter, the global demand stands at a growth of 1.2 million barrels per day. This is higher than what the street was anticipating, given the fact that we was only talking about tariffs and China's weak demand, but the global growth has been on the stronger side. Now, going forward for the rest of 2025, the expectation is that you could be looking at higher demand overall. OPEC talks about 1.2 million barrels per day. World Bank is suggesting 1 million barrels per day of a demand growth for this year, while Goldman Sachs, IEA, JP Morgan are not so bullish. They are talking about 0.6 to 0.8 million barrels per day there. But having said that, all of them do expect demand growth going forward for the rest of 2025 there. OPEC also is projecting that this demand will continue to increase. And while we stand right now at 103 million barrel per day of a global demand, 120 is where we could be by 2050, is the view coming in from OPEC there. Interestingly, much of this demand really is coming in from Asia, as per IEA. As per their survey, they say that Asia will account for 60% of this demand growth going forward, and 25% of that demand growth could come in from India alone. Let's talk about prices now. And as I was telling you, the month of April wasn't so great, but the month of May has ended on a positive side here. So while April saw 15% of a decline, May saw 11% of gains for the prices. Also, when you look at year-on-year basis for the crude oil prices, well, 2025 till now is in the negative of around 11 to 13%. But we also have seen prices continue to decline in the last couple of years as well. So the crude prices have continued to be in a negative for a third straight year. The final plate should talk about on what is the outlook for crude oil prices going forward from here, and that clearly has been revised a lot of time from many of these banks and brokerages and almost to the lower side here. $60 a barrel of an average is what the markets believe could come in from Goldman Sachs and Citi. 64 to 66 is what World Bank, pardon me, and JP Morgan seem to be talking about. Let me also remind you that in 2024, the crude average was $80 a barrel. Now, this year, we are talking about $60 to $65 a barrel. So clearly, a step down in sense of prices.
All right, Manisha, thanks very much for